They're hiding warnings in plain sight, and I've been trying to warn the public since 2020, going into 2022 when they started to raise interest rates. And I shared with you guys, as they raise interest rates and try to cool inflation, it is going to jack up the job market. Guys, this is a stark difference from any other time that we had high interest rates. I want you to pay attention and understand economics. Number one, in the 1980s when we had a high interest rate, we had a good balance sheet, guys. America is negative debt to income ratio. Every single dollar in the system is someone else's debt. The bond market is jacked up and inverted. There is no liquidity in the system. Companies cannot borrow their way out of trouble. The stock market is overvalued. And now they're going to bring inflation down with higher interest rates, and the job market is going to start to get shaken. What that means is the normal everyday person, the middle class, is about to get smashed, because when a company can no longer afford to pay their debt and they have to lower their prices, the most expensive thing on the balance sheet is team members. If you don't believe me, let's listen to Christine Lagarde from the ECB. And yesterday, all these inflation across the United States, China, everywhere around, they're all bringing up inflation now, guys. It's coming. Get prepared. But I'm going to share with you the good news if you're paying attention. Check this out.
Market remains resilient overall, although there are now some signs that job growth may lose momentum towards the end of this year.
Okay, you saw that pause, the swallow. The job markets may lose, and they have to, guys. They're bringing inflation down. Interest rates are high. Money is no longer cheap. Your groceries are 25% higher. Insurance is 30% higher. Appliances are up 12%. Rent is up 20%. So if you made $100,000 in 2020, you now make about $75,000 a year without doing anything. And if you've never heard of the frog in boiling water, that's the public, the American public. The middle class is the frog in boiling water. If you throw a frog in boiling water, it'll hop right out. But if you put it in a pot of lukewarm water and you slowly turn up the heat, it has no idea and it boils itself to death. Guys, America's financial system is screwed. So here's the good news, if there is any. So we have high interest rates. They're trying to cool inflation, going to destroy the job markets. The consumer credit index is maxed out. Everybody's maxed out right now. If you are an investor in assets like crypto, stock market, you're in real estate, an investor, and you held on to these speculative assets that they told you were a fraud, if they lower interest rates on the back end of the year, guys, people are going to come flooding out of the dollar into assets, and your assets are going to skyrocket. So you have the Bitcoin halving, you have the Bitcoin ETFs, institutions coming in, and if they lower interest rates, it is going to go absolutely parabolic. But here's the rub. If you don't get rid of the greed gene and you don't understand that there is no get rich quick and you must pull profits and that somebody has to be the exit liquidity, and most likely it'll be the person who doesn't understand this, you have to pull profits on the way up. So as it goes parabolic, exit on the way up. It's called a ladder strategy. That's how I did it, and that's how I'm going to do it. So as crypto goes parabolic after the Bitcoin halving, the Bitcoin ETFs get approved, I'll be pulling certain percentages of 50% of my portfolio on the way up. I'm holding 50% long-term legacy. So I'm exiting 50% of my portfolio. Let me give you an example. If XYZ crypto goes to its all-time high, I will exit about 10% of that 50%. If it goes to my next target, I'll exit about 15%. Does that make sense? Up to the 100% of my 50%. So as you're rushing to the exchanges, trying to pull profit when everything's going parabolic and they accidentally shut down because of technical errors and you become the exit liquidity, I've already pulled about 40% of my profit. And I secure, and I'm going to max fund more index universal life policies. Compound, secure, and I can borrow against it. I will continue to buy more equity in companies and build my portfolio so I can increase my earned income every single quarter. I will continue to add to my precious metals, and I'm going to continue to expand real estate. And most of all, which makes me the richest man in the world, I'm going to continue to expand and grow and open up my consciousness to a deeper relationship with God. So I love you guys. I appreciate you. I've been trying to warn the public. So as much time as you spend scrolling on TikTok, as much time as you spend bitching and complaining about all the systems, you should be spending that time educating yourself, because this is your one opportunity that our kids will never have. to shift your family's timeline. Warriors, rise! Get your shit together. Let's go. Love you guys. If you need support, first warning, I will never ask you to send me money. We do not invest people's money. Those are scammers. I'm not commenting on your thing. That is not me talking to you. They're using AI technology to mimic our voices. Never send anybody money pretending to be me. I have an insurance company, licensed insurance agents. If you do any transaction with these, you'll be sending money to an insurance company. We teach people how to secure, compound, and grow their wealth with Infinity Banking Concept. That's in my bio here. Free consultations, absolutely free. Then I have my Warrior Academy, which is a paid academy. It is an education academy, not an investment platform. That's in the bio. And if you want free resources, I have my 16-page guide to Warrior Wealth, all free. So I hope this information helps you guys. Please use discernment. Don't get scammed out there, guys. There is no get rich quick. Love you guys.
Dino, what do you think is going to happen with the market and the economy next year?
If anyone says that they know, no one knows. Okay, it's one thing I always say in the market is the market's going to tell you what it's going to do. So, economy-wise, okay, the market isn't the economy. Okay, so let's break it out. Okay, there's differences that's happening in the market. Like, you know, they say Wall Street, Main Street, right? Wall Street isn't Main Street isn't Wall Street, right? From a market perspective, the market's been going freaking crazy for the last, let's look at the NASDAQ, right? It's been going up, which is ridiculous. It's never seen this much of an uptrend on all different indices for this sustained amount of time. So obviously it's going to consolidate. Whether it's going to, now the question is what happens to the economy will affect what affects the market in terms of how much down is it going to go? Is when we say it's going to consolidate, is this going to go like that, right? From a market perspective, I think there's going to be a pullback. There has to be a pullback on all indices. It's just been going through a crazy run, Santa Claus rally, right? But for the economy, it's hard to say because you got inflation coming down, right? Now again, this is it's a reduction in inflation. It's disinflation, not deflation. Okay, two different things. So if there's disinflation, prices are coming down. Gas prices came down. No doubt, things are still expensive. Okay, but here's the kicker to what I see. All the estimates from corporations is positive going in, which tells me what, right? You're not going to see your prices coming down. The prices may not be increasing the way it has been the last year and a half, but it may be stabilizing, but forget about it coming down. So that means what? That means Main Street. That means consumers, everyone, they're still going to pay high prices for stuff, except the prices are not going to be inflating month over month, quarter over quarter, right? So things are still going to be relatively expensive. Why? The wage growth has slowed down. So your salaries, the money you make, hasn't caught up with the prices yet. So things are going to still feel expensive. But when corporations say their earnings are still going to be good, they're thinking there's not going to be a slowdown. Is there going to be a slowdown, a recession? Jobs are contracting, but they're not negative. Job losses are up, but they're not to a point where unemployment is rising. So I think the key question is, you know, how does everybody feel? Is everybody scared about losing their jobs? What's their situation, right? So as long as we don't lose jobs in an accelerated way, the economy is going to become what you hear is a soft landing. A hard landing means recession, you know, and it's just nomenclature. It's just like what people say, right? What you got to watch out for is the next jobs report. Now, inflation we know is coming down. Again, not deflation, but disinflation. The rate of prices increasing is the graph is flattening, right? Interest rates are coming down. So here's the other big thing, right? The Fed says they forecast 3 rate cuts for the year. Now, obviously, the market's crazy thinking the first one's going to come in January or March. I don't see that because what people need to understand is all the people cheering for rates coming down. If the rates drop steeply, what does that mean? That means you've got job losses. That means what? Recession's coming. How can that be a good thing? So it's kind of funky right now. It looks like the data looks like they've pulled it off. That means they were able to slow the economy down, slow down GDP, which is the forecast for next year, quarter to quarter. but not create this dip where people start losing jobs, and then once you start losing jobs, it's like it's like a snowball effect. You can't pull that back really quickly. I think what the Fed has to do is they're worried that might happen, right? So they may start dropping rates to soften that blow. But I don't know. You hear both sides from all sorts of people, all sorts of smart people out there. We don't know. It looks like it's slowing down. To me, it's going to slow down. But you hope that it's not going to cost people a lot of job losses where the Fed has to really bring the rates down. Because for all the people in the market, if the Fed starts dropping rates, that means the economy is slowing down. And believe me, it's not good for the market either. So that's what I think. Kind of complicated.
Got it.
Is the U.S. economy and the stock market going to collapse next year? Well, Harry Dent seems to think so. Harry Dent is an economist. He gets a lot of screen time. He's written a few books. He's made some predictions. Some he's been right. Some he's been wrong. Is he going to be right on this one? I don't know. Nobody will until the end of the year. Now, I'm seeing the same data that he is. Do I see a massive collapse? I mean, the potential's there, but will it happen? Who knows? It's an election year. Election years typically are good years in the market. There's been a couple of bad ones, but we've also had a few election years where we've had a good year in the market and the economy the year of the election, and then it all falls apart the next year. 1929 was one of those years. 1928, I think the market was up 35%. Then 1929, boom. We don't know what's going to happen. You don't know what's going to happen. Nobody knows what's going to happen. All you can do is look at the data, see the momentum of it, and say, how do I manage the risk within my money? And that's all you can do. If we could predict the future, we would have won lotteries and everybody'd be living their most fabulous life ever. Nobody'd be broke. But we can't. Nobody can see the future. So all you can do is all you can do. And managing risk is all you can do. Frazzle Dad out.
It's on like Donkey Kong for 2024. The Fed's dot plot is out, and it says we're gonna have 3 rate cuts in 2024. There was no hype today. Now we know they are gonna go in a direction where there's gonna be cuts. The Feds are expecting the Fed fund rate to go from 5.25 to 4.6. That's 3 cuts. They're expecting unemployment to go up to 4.1 from 3.7. And they're expecting inflation to go to 2.4% by the end of 2024. That means as inflation comes down, so will mortgage rates, but home prices will push up. That means we know there's gonna be lower mortgage rates in 2024. So if you are sitting on the sidelines, call your lender, get approved right now. Get approved at 6.75, 6.5, 6%. When rates do pull back, you want to be ready to pull the trigger. But for those of you who can't wait, here is the nationwide average mortgage interest rates. Remember, these rates are just a ballpark. Give your lender a call so you can get an accurate quote. Let me know in the comments below, when do you think we're going to see these cuts in 2024? I think the first cut's going to happen in May. Let me know how you feel down below.
2 billionaires think the economy is going to crash in 2024. They're betting billions of dollars on this. The first one is one of the richest men in the world, Ray Dalio. And what he said recently has investors freaking out. Yes, we're near an inflection point. And this graph is a good example of the problem. This is the national debt, and he said U.S. is now borrowing money to pay down its debt service. And the billionaire that's like 10 times richer than him agrees. And the third richest man in the world is betting big on this. In the last couple quarters, so 2023, he sold 10 billion, 13 billion, 5 billion, and 5.3 billion worth of his stock, because he anticipates some blood in the water for the economy. They said this is classic Warren Buffett, and when he does it, it's a sign that there's a recession. And they're expecting all this to happen any day. If you're struggling to get leads in your business, sign up right there. It says green screen, but it's a sign up link, and I'll show you how we can help. It's a free trial, so you don't have to commit to anything.
3 billionaires destroying the real estate market right now. And number 1, I bet you've never even heard of. Number 3 is Jeff Bezos. He's on here for 2 reasons. He spent millions in...
I can't breathe. There's no room Chris's ego. Can we go?
If you're a young person hoping for real estate prices to come down, let me show you what scares me. When I was a realtor in the 2008 financial crisis, it was my job to go to newly foreclosed homes, and I often found a lot of neglect. Garbage. These are photos from my camera. Do you know what the first sign of the housing market recovery was? I was on the inside, so I noticed it. It was real estate investors regaining their interest. In fact, I picked up this duplex in 2011 at the bottom. That's why this chart has me worried. Earlier this year, investor demand turned the corner and started bouncing up, as did the price that investors are willing to pay. And this is why